to Jayant Mhaiskar, who's CMD MEP Infrastructure Developers. Mr. Mhaiskar, it's good to have you on the show. Can you explain the results of Q1 to our viewers?
MEP Infra announced its consolidated Q1 results for FY18-19. The company has clocked a top line of 825 crores, which is up by almost 117% if I consider the Q1 of last year corresponding period. The company has clocked a net profit post-tax of 26.21 crores, which is up by almost 102% as compared to the Q1 of last year financial year.
Good afternoon, Mr. Mhaiskar. Let's also get in a sense as to what the outlook is on your order inflow. Will it remain strong in FY19?
The company has basically got 4 new hybrid annuity projects in the last quarter of, I would say, FY18. The financial closure of those 4 projects is underway, which is expected to be completed in the next 45 to 60 days, post which construction would start on those 4 projects. Having said that, the company has added a couple of toll projects from NHAI, which are short-term toll projects, in the current quarter in discussion for June FY19.
Do you think that execution will pick up in FY19?
As far as execution is concerned, if you see the breakup of the 800 plus crores of top line, 25% of that is predominantly coming from the construction side, which is expected to go up and balance out the overall top line in a 50-50 kind of a situation where 50% of the revenues will come in from the construction and 50% on the tolling, which will add up to 100% going forward in the next quarters, considering the current 6 projects which are under construction, in addition to which the 4 projects construction is expected to start in the Q3 of this financial year.
So what has been the cost of capital for infrastructure? Is the much needed capital for the sector higher as projects are now being awarded and they are increasing fast? Is that also increasing your cost of funding?
As far as the capital is concerned, I would put it into 2 aspects. One is the equity and second is the debt. As far as equity is concerned, I think most of the companies which are currently bidding on particularly on the HAM projects are, I would say, definitely capitalized in a manner where they can support the growth what they are progressing on. As far as debt is concerned, I think there is definitely, I would not say a matter of concern, but definitely some aspect needs to be relooked into where the banking sector is revived, which allows the banks to participate in these HAM projects up to the tune of, I would say, 60% debt equity, whatever is the number required, which allows the sector to grow at the pace which it expects to multiply over the next few quarters and years to come.
Do you think that the innovative methods of asset-light funding are needed to be used more for getting more funding from infrastructure projects? What is your opinion?
I would say yes, for a simple reason is I think the new guideline which is expected to come where the companies with a certain amount of debt needs to also look at the bond market as per the regulators' expected guideline. I think bonds is also some avenue where the funds can be raised at a competitive price and in a more structured manner over and above the banking, I would say, sector, which definitely funds most of the major, I would say, infra projects which are currently underway and going forward.
We'll let you go on that note. Thank you so much, Mr. Mhaiskar, for taking time out and joining in.